Live Intraday Strategy webinar. Today is Tuesday, May 10th. Michael Boutros with you on the horn. Good morning, Margin, Steve, Ted, Ty, everyone in the room. Great to be with you guys. Sorry I missed yesterday's webinar on Daily FX. Had a little charting incident and we had to put that one off, but it's good to be with you guys today. So where do we start? Okay, the market sell-off has been phenomenal. It's stretched. We're seeing a little bit of a kickback here today with equity markets looking futures pointing higher. But ladies and gentlemen, the damage is done. So we've seen some profound breaks. I see your questions there, Ty. SPX, DJI, NASDAQ, 10-year, crude, silver, and the 10-year I'll add to the list here. Interesting movement in crude, actually. You know, you're seeing that pullback tide, but it's still within the confines of the broader consolidation formation. So everyone's calling a high, everyone's calling a low on every turn. That to me just gives us more indication we're likely to see a little bit more back and forth there, but we'll take a look at the levels. So let's just jump right in. Time is short. Here's what the last update looked like as we were opening up the month of May, okay? We're still in the same exact level. Here's what we looked like on the first. The 2017 swing high at 103.82 is the level I've been talking to you guys about for the last 3 weeks, and it's still the level that we're focused on. It is key resistance, okay? Upslope resistance. We added this parallel also, which is just another parallel of this pitchfork off that swing high from last year in November. Still guiding pretty well. We're still at resistance on a closed basis. Haven't been able to clear that. So the last, I mean, obviously last week we got a lot of volatility, but from 1,000 feet up, right? From 1,000 feet up, helicopter view, we're still at resistance. So brings in that, you know, tendency to still not want to chase the dollar higher from here. Yes, it's in an uptrend. Yes, it broke uptrend resistance, but that stretch just played out and we're still at resistance. So I can't get excited, guys, about really long dollar exposure from here. Here's what the DXY looks like on the daily chart. Here's what the daily chart looked like, you know, back into the start of the month. Right here, that was the high. We pulled back right into slope support. You can't make this stuff up, and we rebounded right off that slope support back at resistance. 103.82 is still the level to be. Now, if we close above that, you're probably going to see a straight shot to 104.88, my humble opinion. That's the 1999 swing high. It's been a decent pivot back there, but nothing too crazy. All right, if we go all the way back there, you can see some decent lows, some decent highs, some pivoting action, but it's an acceleration point. So 104.82 is kind of the next level up on the daily chart if we do crack this upside. Also note that on this push higher, you're getting some divergence, right? Price action making a higher high on a closed basis, the oscillator making a lower high, one reference point above 70, one reference point below. So it's a pretty dramatic, you know, exhaustion signal flag, not necessarily manifesting in price yet. But the good thing is, if you look at this on a 2-hour chart, it's not the sexiest setup. It's a simple weekly opening range. Nothing more, nothing less. Here's your weekly open, set a high, set a low. You're still there. You got to pivot back below 103 to open up a larger pullback, okay, towards the 102, 101.80s. That's support. Watch a hold there. Top side breach, like I said, 104.88. Slope comes in a little bit higher near 105.15, 105.50, excuse me, 105.45. All right, so that's the dollar in a nutshell, right? At the end of the day, the weekly chart is really pressing resistance. We got to watch this. On the daily chart, showing divergence, outside reversal off that pullback last week, but man, still holding resistance. Near-term support is at 103. All right, so that's DXY. A quick segue into Euro. I haven't really been too crazy about this trade either, but our last Euro update, if I recall correctly, is back here. Yep, back on the 2nd of the month. And on this one, I'm not sure why that chart's not working. Sorry about that. Have been having a little bit of a bug on this site, guys. I'm sorry about that, but here's Euro. Our tech is working on it. Here's Euro from the top down. Same thing at support. It's going to be two levels that we're looking at was 105.31 and 104.48. We never scratched 104.48. That's the 2016 low week close, but certainly the 2017 low week close has still continued to hold, and that's 105.30, sitting at support. All right, here's what it looks like on a closed basis. A couple of slope lines here, but you know what? We could probably ditch this one, the interior. There we go. A little cleaner, right? Intraday, or daily rather, looks like this. The bottom end of trend support, downtrend support. 1, 2, 3, same pitchfork from last year. Downtrend resistance, never closed above, okay? Downtrend support, never closed below. Okay, now it's not the strong signal that you're getting in DXY. There's not like radical divergence here and all that stuff, but it does suggest, again, this could be a raised floor, or a lowered floor rather. Raised ceilings when you turn ahead of resistance. A lowered floor is when you turn right ahead of support. But the interior slope lines still continue pretty hold. These are just parallels right here. So at the end of the day, weekly and monthly opening range taking shape. Here's your monthly open. All right, we're taking shape right above slope support. All right. Need a break below 104.62 on a closed basis to mark resumption. The big level, if we see a collapse, is right here at 103.50, 103.85. This is massive. 2016 low day close, 2016 low, huge level, slope support all throughout this month. That's going to be absolutely critical on a break lower. Okay. Need full price with pitchfork start, please. Yeah, sure. It's right here. Okay. Insane, phenomenal levels, Ty. This thing has been textbook. So we're coming off of downtrend support. Look for a break of this immediate range. On the top side, 107.26 is the breakout. If you get through the median line, you get through that low from the 2020 low day close, I think you start to look for a little bit more of a larger rally. At the end of the day, you're just coming off downtrend support, downtrend resistance, like I said, near that 107.26 level. So I do like, if we do recover here, if the dollar pulls back, if the opening range breaks higher, I do like the euro for a bit of a recovery. Okay. On the downside, if we break, clear-cut targets. Clear-cut targets. Okay, so that's number one and number two. Let's jump into last night's update, a little bit more timely, and that was what was going on with dollar CAD. Dollar CAD's at resistance by all counts. Starts off with the weekly charts. This one's phenomenal. We broke the yearly opening range. We broke this big resistance zone that held all throughout the beginning of the year. Second quarter breakout has us looking higher. We're now at the first level of resistance. We probed through it, but we're there now. 29.75 into 130.23. I don't like giving you guys a 50 pip range of resistance, but when we're looking on the weekly charts, we have to open it up and really consider the larger range. This is the 2020, yearly open, okay? It's a basic 38.2 of the entire 2020 drop and a huge pivot in price. Look to the left, look to the left. Break, acceleration, support, 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 right? Huge region. We're there now. That's on the weekly chart. So what this implies, again, is that we would need a weekly close northbound of 130.23 to continue favoring the immediate upside. Guys, this is what, 6 weeks? 1, 2, 3, 4, 5, 6, 7 weeks up? When's the last time we saw something like that? It was right here. 7 weeks up. We saw a 1 week interruption, another high before collapsing. Again, not suggested that that's exactly what we're going to see, but what's the tendency right here? 7 weeks up, big outside reversal, 1 week consolidation, and then another leg lower. What about prior to that? 7 weeks right here, 1 week interruption, another high, and then a move lower. So if we take that objective price action, we just looked at the last 4 instances, and they all essentially did a similar scenario in that this week or next week, you start to get a little bit of a fade. Then you go for one more high before finally getting a larger correction. That's just what the price action implies looking back over the last 4 instances. That jives pretty well with what we're looking at on the daily chart. Here's dollar CAD on the daily, right? 38.2 retracement of 130.23. There it is. Probed through it today, buckling back. First area of support's right back at 29.50, 29.38. Okay, massive level of importance also against the 2019 swing low. Pivot, break, resistance, 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 and that is now support. Bullish invalidation is at last month's high day close. That's no longer the 22. That's the April high day close now, okay? And that's gonna be support. Whoop. This retracement stretched to the highs. A 38.2 doesn't come in until 128 basically. So that's your focus. First level, 29.40s. Second level right here into the 29 handle is absolutely critical. In fact, yeah, leave that open, 29 is 29.75, okay? So that's the daily chart. Again, very similar scenario is that we're coming back from, didn't get into oversold territory, didn't get a divergence point, but nonetheless turning right ahead of 70 here. What does the intraday say? Well, here's the chart I've been showing you, and here's where we stand now. This is such a big resistance zone, guys, that if it were to break, you know, I told you last night, 31 was a soft target. Really, you're looking for 31.72 and beyond. It's a massive level of resistance. Don't take my word for it. We just looked at the weekly charts, right? And the daily charts. Here's what it looks like on the intraday. Last night, I was giving you the heads up. 130.23 was pretty big. You saw a little bit of a probe here. Nice 4-hour reversal candle, okay? Takes outside reversal candle. Was the start of it. If you were trading in Asia or early Europe, there was a beautiful opportunity again to try to fade that move. And here we are on our first approach. 29.75, have it as a soft target at this point. The real first level is 29.50, like I just said. And then key support right into 29.80. So something like this. All right, that was what we were trading, remember, last week. Dropped right into the median line breakout. I just wanted to show you how this played out. The downslope broke. Was a nice shot to the upside and continuation pattern. So this is done null and void. And here's the beautiful formation for you, tie right off the lows. Can't make this stuff up. Just beautiful. All right. That is dollar CAD. We don't have much dollar CAD data of note. The week really, it's all culminates tomorrow. Okay, we get the core inflation read out of the U.S. We're expecting a print of 6%. That's a softening from the 6.5. Anything northbound of 6%, and you're gonna see interest rate expectations start to shift again, right? Whether it's 50 basis points or the possibility of 75 basis points is kind of what everyone's throwing in there. We already know the sort of schedule for the beginning of QT, quantitative tightening, which is on the way. There's a lot of headwinds, and we're going to go into the equity markets, guys, which don't look so good at this point. But I'll leave it there. Questions on dollar CAD? That's number 3. All right, number 4 is your Aussie. If this Aussie breakdown is legit, this thing is in big trouble. Remember what level we were talking about, 69.90 into the 70 handle. This is so critical. The 2020 yearly open, the November lows from that same 2020 calendar year, okay? Support, last year's close low and last year's low is in this range. This year's opening range low is there. And here's downslope support for the proposed pitchfork off the highs for the year, for the years, right? If this is legit and we are going to close south of 69.90, we're in trouble. We're in trouble, all right? The first level comes in, just a pivot low here, right? I don't want to go crazy with it, but if you can see to the left where that marker is, somewhere in the range of 67.70s, I think is what I noted. Below that, the 2019 low, the 2008 low week close way back here comes in at 66.60. 66.70. There's a lot of room here. This is big trouble. If Aussie doesn't correct and find its way back above the 70 handle soon, this could be disastrous. So why do I think that that may happen, or why do I just give you that warning? Again, dollar is stretched. You're seeing euro at support. You know, if we just see a material rebound and a close today back above, this would be the quintessential exhaustion pattern. Now, that's the if-then statement. If we rally here and we hold into the US Open, we mark another leg down. Again, 69.07 is just a soft target. You're looking for 68.33. You're looking for 67.74. It could be a quick shot down, something like this, if this is a legit break, especially if it holds resistance and moves off. So it's all about the pivot at 70. This is absolutely critical on all time frames. Again, the daily chart, here's what it looks like, right? Big break, support, 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 break. This should be resistance if it's legit. Next leg's down, take it towards 68.27 and 67.50s. Questions on Aussie? We'll rethink this pitchfork from last year is kind of just a match for basic trendline resistance here. It's been decent, but we're losing some efficacy here around the median line. So we'll rethink this one, this pitchfork. But for now, the focus is pretty clean. We're at downtrend support. We're at a major support. If this is legit, we would need to see resistance at 70. Questions? That's number 4. Number 5, here is gold for you, Ty, coming into some support. So let's take this from the start. Here's gold on the weekly chart. The level that we've been talking about in the room here for the last 3.5 weeks has been what? 1849. That's the 2021 high week reversal close. Big level from a technical standpoint. You've seen some pivots there before. You've seen resistance there before, a breakout there before this year. And now it converges on a 2-point touch slope. 1, 2, is this the third? So it gives us pause, 1849. The bigger level from a technical standpoint is just lower. And I told you guys this as well. Both of these levels are what we're looking for a possible low over the next few weeks. 1849 and down here. My favorite Fibonacci confluences. I tell you this all the time. 618 retracement off the low, 100% extension off the high, 1818 into 1828. This $10 range is absolutely critical. Okay, the 52-week moving average objectively comes in just above. You have slope, the dominant trend line, right? This is your original slope, parallel, one touch, breakout, support, 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 parallel. It's right there. It's right there. So bottom line, end of conversation is we're looking for an exhaustion low in gold at 1849 or 1818 into 1828, one of these two levels. So what does that mean from a trading standpoint? If you're short, you want to be shaving off some here on a ditch on 1849. Go ahead and take some off. Bring your stops to break even, if not better. I'd have my stops way in the money at this point. A dribble lower, if we break, this is likely to be very fast if it happens. But even in that scenario, I'm still looking for that pivot there. So I'd be closing out any short positions on any drop towards 1828. If you're looking for new exposure, the only thing we can do here is sit on our hands and look for the exhaustion low to manifest. Either a reversal candle, a pin bar, a doji, divergence on the intraday chart, divergence on the daily chart. We need something before we start fading a move like this. This is the weekly chart. We've ascertained all this information just by looking at the weekly. Well, what does the daily look like? Even cleaner, even cleaner. Here's the pitchfork we've been following just off of last. This is off of the lows from last year, right? Trend support, trend support. Whoa, 1849, that's trend support. We're there now, okay? And there's the confluence zone. So if we break, that's the last ditch effort. Anything sub 1818 and the entire gold trade could really fall apart into the 17s and change. You're looking for a break of the yearly opening range lows in that instance. Right now, looking for the exhaustion low. As it stands, again, taking a step back and looking at this arbitrarily from a technical standpoint, it's a very clean monthly opening range. Here's your monthly open. You drop into a low in the first 3 days. You rally into a high in the first 5 days. You test the lows today. Your monthly opening range is set on the 10th. If we break the downside, objectively, you're looking lower. Again, that's your next key range. If this holds today, forget this 100 at this point. I don't want to spend too much time on the 100, but if we break through the monthly open, which is 1897, that would be sort of your green flag, if you will, to start looking to build on the recovery. But right now, man, we're at big support. Here's what it looks like on the 2-hour chart. Here's the 4-hour, same formation. Excuse me, no, this is a modified pitchfork off the highs. This is what we've been working with. Here's what it looks like. And here's what it looked like on our last update, Aussie and gold, okay? Nothing's really changed. Nothing's really changed. That drip right there, right, is what we were looking at last night. Again, there was support. It held. This was, yeah, this was last night. Weekly open resistance at 1883. There's your May open, right? So if we get through this zone, I think you look for the larger recovery. Until we do, it's still just a range right above key support. Okay, questions on gold. This one will matter tomorrow. Very sensitive, obviously gold, one of its primary functions historically is inflationary hedge. Tomorrow we get that update on CPI, okay, to give us sort of a cleaner, more updated picture of what the inflationary picture looks like, but it doesn't look good. We're gonna jump into equity markets after this, but it's important to note, guys, there's not much headwinds, there's not much tailwinds rather, for markets right now. I don't know if I've said this before here in the room. I don't want to be all doom and gloom, but you have inflation, which is not likely. Again, I'm a student of economics. You know, historically, prices are very sticky. Inflation is very hard to tamp down, more so than it is to stoke, which is what the Fed was trying to do for 10 years. So you have inflation running hot. You have the energy market, which has been decimated, right? We have all kinds of issues with, you know, supply chains and all this, and even the energy price problem in general is not going away. So you have that on top of the inflationary picture. On top of the geopolitical picture, doesn't look all that good either. And everyone's saying, well, you know, earnings are good, and that's true, but that's all previous or prior to demand destruction. And that's what happens when you go into recession. So the demand destruction has not necessarily filtered through. People are still rather liquid, got a lot of injection of cash in the markets with all these bills and COVID relief funds. So all that's going to filter through, that's stoking more inflation. And as it slows and that money starts to dry, and now you're starting to see wage inflation is good, but it's not keeping up with headline inflation. So overall, the country's essentially getting poorer, right? It's important to keep in mind we are entering an acceleration phase lower. Ty, I couldn't agree more. The funny thing is, I don't think this was a surprise. We've been having these discussions, guys, in the room here for months. 3 weeks ago or 2 weeks ago, I told you guys that I think we're in recession now. We're already contracting. The first quarter print was just the conviction like number, but all of this is going to come to a head. All of these are going to come to head. Your weeklies are exquisite. Oh, thank you, Ty. Cheers, mate. They're not my levels, man. They're the market's levels. I'm just helping you find them. So tops are in and confirmed. Yeah, I think, yeah, that's a technical stance, Ty. I completely agree. The top was in. And we'll go into equities in a moment. Once the uptrend broke, it was kind of like end of conversation. So that's gold. Silver, I haven't looked at. So let me just hit that for you real quick. Number 6 is silver. I haven't looked at this since last week. All right. Okay. So remember, last week we broke here. We tested as resistance. And even then, I didn't really know what to do. The 786 didn't offer you jack. It came right into it with an outside, with a reversal candle, again tested as resistance and shot lower. Here's the next level down. Forget this now. Here's the next level down. You're back below the yearly open, but you're not below, or you are now below, excuse me, the yearly opening range lows. So while the yearly opening range lows looks like it broke and closed below yesterday, here's this pivot zone with the swing lows from the September and November lows of 2020. You got a stab here back in September of this year, or excuse me, 2021, rallied higher. A stab back in December, rallied higher. This is your yearly opening range lows, huge zone. huge zone. So while I do think that you probably do get a stab lower in my humble opinion, I do think you're basically fishing for a low here too. Not a major low, not the low. We've broken uptrend support. This was a confirmed break back on the 25th. End of conversation. That was a break of uptrend support. It was a break of the monthly opening range lows. It was a break of the previous month's March low. It was a very, very clean. This is your next sort of plate on the floor. So I'd be looking for a pivot here. Let me just check out a couple of things. What's the 1618? Watch 2146 on the break lower. And I just want to see what this looks like. All right, I don't want to get married to this slope just yet, but I do want to see how this pans out. On the downside, well, here's your monthly open, and here's your monthly opens right there at 2274. It's a tough one, Ty. It's a tough one. I would say, you know, it's a very similar scenario to gold in that you're basically fishing for a low. You're basically fishing for a low. If it's going to happen, like these are the levels to look for, some sort of rebound. Again, the way these are one of those trades that we should get a confirmation pretty quick. If this breaks, it's going to be a slingshot lower. Okay, there's not much price action in this zone. But until we do, you know, the downside, the immediate downside's at risk into this zone. Does that make sense? Not my favorite setup, but a quick take on that for you as we head to Tuesday trade here. All right, that's silver, number 6. Number 7, I just want to take a quick look from that same update, or the previous night's update, was Euro Aussie. Not a favorite setup of mine, but that ended up being the low. Remember, my favorite Fibonacci confluences, as I always tell you, 618 off the low, 100 off the high. Caught the low to the pip. That ended up being the low. So while it looked like it broke uptrend support, bam, correction territory holds. Once we buckle back above that slope, you're right back on your way. So here's the 120 looks like now. Here's the 120 looked like back then. Hold, back above. We removed the 618 since then. That's a breakout right there. And we're right back, we're right back, excuse me, at the highs. Right back at the highs. So for Euro Aussie, the only thing I wanted to note is that this level here at 52.74 is actually the next major resistance zone. Why? Here's the daily chart. Don't take my word for it. High, high, breakdown and acceleration, support, 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 resistance. If that's not a pivot, I don't know what is. So we got to keep in mind this whole key zone of resistance is being tested right now. All right, so a little bit of a pause there for the broader uptrend and the breakout that we were seeing in Euro Oz. It's a clear breakout of the monthly opening range. Does keep the focus looking higher, but the immediate thrust is at risk while below 52.74. So quick update on that trade here. Near-term support 150.48. Bullish inval at this point. I was looking at this earlier today. You know, you could do this two ways. If you take the assumption that we're at a little bit more of a conviction high here, the 38.2 comes in a little bit short, but it's right here at 49.10. Forget last week's open. Actually, that's the monthly open. Leave that there. Leave that there. So your bullish inval, as it were, is something like this. All right. So topside breach, bullish inval, near-term support. Updated chart here for Euro Oz. Questions? That's number 7. All right. Excuse me. Let's jump. Well, before I do, you know what? Here's the 10-year. I don't really track this. This is for you, Ty. But what I did want to note was that yesterday we marked an outside daily reversal candle. Typically a bearish formation, not a perma bear formation, but you can see the last few times that we've seen that, you've seen a decent pullback in rates. So obviously these are yields, guys. Yields down, price up means people are jumping into the perceived relative safety of US Treasuries. Now that would suggest again that that's a risk-off environment. And typically that's not necessarily the best of things for sentiment. So it does look like we're pulling back. 290 is still a level I'm looking at, but we'd need to sort of reassess the scenario here. Here's a new retracement with the new high. A basic 236 doesn't even come until 270. So it's an aggressive call, but you're seeing it manifest here in rates. So if we take a lateral move here, that's number 8. Number 9, here's what the SPX looks like. This stuff is so clean. I've been staring at these charts, guys, like a hawk. You really don't need much because the technicals have been so outstanding. So here's what SPX looks like on the weekly charts. Okay? Come on. Come on. We called the break right here on the week of April 18th. Closed uptrend support. That was the last ditch slope. Again, these are all parallels of the dominant original slope from back here in 2020. Support, support, break. First level we were talking about was 42. Second level we were talking about was 39.24. This is from the weekly standpoint. I still think you get this. I still think you get this. That's just to complete 2 equal legs off the high. Nothing fancy, and it converges on slope over the next few weeks. Could you get some sort of meaningful recovery here? Yeah, sure. Even up to 42 wouldn't scratch it. You're still in a bear trend. You're still broken uptrend support, right? You're in trouble. You're in trouble. So here's what it looks like on the daily chart. Okay. Yesterday's decline broke the median line that we've been tracking, keeps the focus on a test of the 25% parallel. That comes just below the 39.24 level we're talking about, which was, again, 2 equal legs off the high. 1, 2, 3. The high day close that you see there, that label, that's the high day close from back here in March of last year. That was the opening range test that failed before the breakout, which inevitably gave us a breach of the yearly opening range. So it's a very nice pivot in price. You're seeing some kickback here today. Possible resistance up into the median line. So you're talking like 40.70s. All right. What would turn me bullish, or what would have me thinking, oh, okay, a low is in? It would have to be a daily close above the monthly open. That's 41.40. If we're able to make it back above there and close, I would dignify this as an exhaustion low, and you'd look for a larger recovery towards downtrend resistance. That's not the case right now. Right now, you've seen a 4-day massive, 3-day massive decline. What was that like? It's got to be a decent percentage move here. Right, whatever, 7%, 8% on the way down. Yeah, take some back, but not too much. Here's what it looks like on the intraday chart. It's a 2-hour. Here's a 4-hour. So within that embedded formation, we've been looking at this just near-term channel. I was playing with this earlier today. Here was our last update on the SPX, right? On the way up for the recovery. That held resistance and then came back and tested resistance again before failing. And the move lower had us looking for 40.35. We're there now. And again, 39.24, big level. So on today's rally, sure, we could get up into 41.17, 41.30s max, but I don't want to see anything more than that. And again, don't take my word for it. Here's the chart. You got a low, you got a low, you got a low, you have a low. Really strong stab and a slingshot. Once it breaks, if this is legit, this should be max resistance on the way down, 39.24. Comes in on slope today and tomorrow. All right. So I think we should pay very close attention here. The levels are outstanding. Again, here's the 120, a little bit closer. Here's the daily tie. And here's your weekly. All right. So that is number 9. Number 10, here's NASDAQ. Very similar scenario. NASDAQ has just fell through the floor, but we're already, again, here at a level that we want to pay attention to. And that level was right here at last year's objective swing low. That's 12,280. Okay, right here. 12,280. We're probing below it now. This is slope, just a parallel. Take that one. Well, whether you take it to the low from January, whether you take it from the low from February, which kicks it down to here, that puts you on trend a little bit later, another week or so. But you get the picture, right? This is last year's low, confluence support. Watch the weekly close. We're looking at the weekly chart here. It needs to be a weekly close sub 12,280. To validate the next move lower, 11,768, 11,520. That's 2 equal legs off the high. And that's 50% retracement of the advance off the 2020 low. Big, 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 big confluence zone. So you can see, again, a little bit messier on the break of the broader uptrend, but we did document this pretty good. Once it gapped lower in that breakaway gap, it's been a one trade shot. Low close, big, big zone of support. We spent 2 weeks here. We closed here last week. Again, another breakaway. Looking for some sort of reaction pivot here. Here's what it looks like on the daily chart. October 2020 high. September 2020 high. Resistance, resistance, resistance. Breakout, support, support. What are we going to do here? Watch today's close. Close below 12,000. Again, the October high comes in from 2020, 12,166. So a little bit bigger of a range than we had on the weekly chart, but if we break through that on a closed basis, 11,768 and 11,520. That's really the whopper. That's the equivalent of 39 and change that we talked about on SPX, right? 2 equal legs off the high. Resistance now 12,668. You'd need to close above, again, the monthly open, the median line, 12,864 to validate that a more important low is in place. And at that point, you look to play the recovery. But right now, man, we're at support. Today is absolutely critical. SPX, NDX, right? Here's DJI. Dow Jones is just now threatening a break of its yearly range lows. Now, again, we've seen that already materialize on NDX. We've seen that already materialize on SPX, but not on DJI. Today would be the first day that we're actually probing a fresh yearly low. The only thing I'm looking at here, and again, I don't trade this actively, again, just for a disclaimer here, but the only thing I'm looking at here is that median line. It was a perfect touchback here on the first of the month. This is also now the monthly opening range lows. A break and a dictate below the median line for me would be the resumptive move. 2 equal legs here. So again, the collateral damage or the sideways comparison to what we're looking at in SPX and NDX with 2 equal legs down gives you 30,812. Got some room. So a much tighter trend, right? A much tighter trade. Here is, let me just drop the monthly open in there for you. Okay, that's your monthly open at 32,978. This is a really tight trade. You're looking for reaction here. If we pivot lower and it breaks, all right, cool. Let's look for 38.12. If this holds, you'd need to close above 32,978, the monthly open, again, to validate that a little bit more of a washout has occurred. So you know the if then statements, you know where we're going to get invalidated if we're wrong. At the same point, we are bearish, but we are at support right now. So it's either a rebound here to get back in short near resistance, or if it breaks lower, you don't chase. If you're not holding the shorts, you got to wait for some sort of kickback towards the median line. You look to get short there, and then next leg lower is 30.82. So much more precarious here on DJI than SPX and NASDAQ, just because of where we are in price, straight up. This is just now testing a new yearly low, a break of the yearly opening range low, and slope support. So this is one of the ones where if we do see a recovery, I think likely to get it a little bit more easier here. Questions? Okay, that's 9, 10, and 11. I think I covered everything except for crude. So look, Ty, I don't, really know what you want to do with this. Let me take a step back. Here's oil on the weekly charts, and if it doesn't make sense to me here, I usually don't even get any deeper. For me, this is a very simple consolidation patterns. You're seeing lower highs. You're seeing it is higher lows. You did get that big, massive outside reversal candle in April, but for more all intents and purposes, you're getting higher lows, lower highs. It's crunch time. Forget the 618. It's crunch time. Crunch, 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 crunch. Yeah, waiting, waiting, waiting. Ty, that's all we can do here. That's all we can do here. It's and again, the broader trend, in my humble opinion, is up. I don't think that that's really for debate. That's from a fundamental and technical standpoint. But could we get a broader washout first? I mean, I guess, I suppose, right? I think if you are looking for oil to go lower, I think your basic premise is demand destruction. You're basically suggesting that we're going to see demand dwindle because of the recession, not so much that we're going to get a resolution to the oil problem, or all of a sudden, the Biden administration will start upping U.S. production. I mean, that's not really, I think, in the cards here. So here's the daily chart. It's sort of a mess. Last month's opening range never gave out. Even when we did test it, we came back right yesterday. So I'm at a loss here. Here's what the intraday chart looks like. This is what I've been showing you from last week. That broke yesterday, completed a 618 retracement of the advance, and here we are bobbling just above 100. Could we get a strike lower? Sure. It looks like, if I look at this right off the bat, 1, 2, 3, 4, I need another low to complete a 5-wave Elliott formation. So I think you get a stab towards 100, if not lower, just based on the price action. But it would suggest that the broader move here, the terminus of it, is soon, and you would look for again a recovery back within the confines of this consolidation. So that's all I'll say on that, Ty. Marcin, you got a list for me as always. I'll go through those as quickly as possible. Here's Kiwi. It's a very similar setup, Marcin, as Aussie dollar. I think Kiwi, here's Aussie testing big support. Here's Kiwi testing just lateral levels. This already broke the yearly opening range lows a couple weeks ago. Big break of the yearly low close, right? It was a big move, dropped, completed a 618 extension, dropped again. I think resistance at 64.50s. Next level down 62.30s. That's huge. That's the 618 of the entire rally from 2020. So it's a downtrend, but again, Marcin, it's so stretched, brother. I mean, this is again 6 weeks or 7 weeks down. It's a similar scenario where I can't chase it. I can't chase it. Here's what it looks like on the daily chart. Really tight. I hate these real tight channels. I don't even have the levels mapped out here on the lateral approach, but again, 64.50s is resistance. That's also your monthly open, just a bit higher. I think that 618 is where I'm going to be looking for a bigger play here on Kiwi. 62.30s. Something like, whoop. Something like this. Okay. Hi, Will. Kiwi. Okay, me too. It says Marcin. Right on. Right on. All right, so that's that one. Euro Oz range. I like this lower. Or Euro, oh, this is Euro Yen. I'm so sorry. You said Euro Yen. Yeah. I like this lower, but anything yen based, you're really fighting a strong trend. I mean, here's your dollar yen on the daily, guys. I mean, I don't even look at it anymore because the breakout has been so amassed and just so stretched out. Here's dollar yen on the weekly, so stretched out. Like, there's nothing here for me. If you're not in the trend and you're not long, kind of just holding on, holding strong, you're chasing. There's nothing to do here. From a technical standpoint, there's no respectable way to trade this. Now, I personally think that it's stretched beyond stretch, and I'm one of those guys who loves to play the pullback. That's just in my inherent nature. I think you get the pullback. And on euro yen, you know, that's yen strength would put this lower. Here's the euro yen on the weekly chart. This is the original slope. Break. Is that resistance? 618 retracement. Big retracement. That's from the decline off 2008. So I think the top side looks a little exhausted. I wouldn't get into this personally, Marcin. If we see another stab into 141, I'd probably be looking to fade that. That's just my humble opinion. Not involved in this trade. Does that help? Real tight range. And again, your monthly open, here, watch this. This is a very, there's no need to complicate a trade like this. It's a very clean weekly, monthly opening range. Here's your monthly open. You know, anything southbound 136, you're looking for that corrective move. 2 equal legs off that high. A lot of people are going to be calling this a head and shoulders already. I can see it. But if we are to stay objective and disciplined, if it breaks the monthly range lower, you're looking for like 33. But that remains to be seen. This is kind of a boring trade for me right now. And sterling yen, Widowmaker, is that still at support? Almost there. 59.70s. It's where we bottomed out last month with that big pump. It's the monthly open. It's the monthly opening range lows, all from April. That's key support. That's key support. Again, another head and shoulders formation here. I'm sure you're going to see people be calling it all the day. Nothing matters until you break the neckline. Neckline comes in somewhere in the range of this. Whoop. So if we were to break, again, 59.70, sure, yeah, I'd say that's a pretty damn clean head and shoulders. But until that neckline breaks, doesn't mean anything. And that's the problem with head and shoulders, guys. Every time you see a pullback, high, low, high, everyone starts screaming, oh, it doesn't mean anything until we break the neckline. So keep an eye on this one. Might be a decent play, actually, but for now, you're basically sitting at support. All right. I've got to run. We're going to go ahead and wrap it up there. Thank you, guys. Again, good to see you all in the room, a packed room this morning. Best of luck trading. Watch out heading into tomorrow. That's where all the fireworks happen. CPI is going to be big. And I will see you guys on Thursday morning for an update on what's going on here. Best of luck trading. I'll see you then. Cheers.